Hi, it's David here, CEO and founder of the freedomfounders Mastermind community. For those of you who follow me, you know that I have a great deal of experience, many decades of experience in the field of investing, and more particularly in the field of real estate investing. I've been doing it since I was in my early 20s, and now have 43 some years of experience, not just my own, but also helping others navigate their own investments in alternative investments such as real estate through my Freedom Founders community. I'm also part and participant of many other groups or tribes. Many of them are involved in real estate, high-level people, high caliber, different levels of experience. I'm probably at the greater spectrum of those with experience. There's others in my era. I won't tell you how old I am, but yeah, I'm a boomer. Many younger people that are also very, very, have a lot of inspiration, I think. And what a lot of people don't understand who haven't been really on the forefront of investing their own capital. Many people are more passive and abdicate it to financial advisors and 401ks and mutual funds, and that's fine. If that's where you are in life, there's no bad on that. What I realize is that a lot of people get into investments, what I call late cycle. Different kinds of investments, not just real estate. It could be anything. It could be in the tech bubbles. We're in a tech bubble right now, in my opinion. We had a tech bubble back in 2000 and 2001. We've had different kinds of bubbles over the years. They're part of normal market cycles. These market cycles come and go in different sectors of the market. Financial products and tangible products like real estate go through cycles. And a lot of people get interested in different kinds of investments late cycle because that's where the exuberance comes in. That's when everybody's doing it. Well, just look at crypto. And I'm not here to be a protagonist or antagonist for crypto. I'm not going to even talk about where I would even place it today, although I'd place it in the speculative arena. I'll say that much. But look what happened there. Over the last decade plus, crypto was very, very nominal. And then back 2 years ago, it kind of blew up. There's a lot of reasons for that. I'm not going to go into it. Not based on any fundamentals, more of the emotional behavior of the markets. What was going on at the time coming out of COVID. Well, actually, in the middle of COVID and all the money and the stimulus that was going everywhere is a part of the reason I think that crypto and Bitcoin took off. It took off, and then it dropped like a rock. And it's still down today, and it's doing very, very little. Not to say it couldn't pop back up again, but these are what I call fad investments. And a lot of people get hooked on fad investments at the wrong time during the cycles because they just don't know better. If you haven't experienced a true market cycle with your fingers on the pulse, that is actually being active in orchestrating your capital through a different market cycle, then you have no bearing, no perspective, and so people can lure you, or the market can lure you, into jumping in late cycle, late in the game. And I see so many people. It happens every time. I've been through a number of these cycles, and it's nothing new to me, but I see it even with the people in some of the higher caliber real estate investing groups who also, I see them becoming complacent or believing that, like a lot of people, well, this will never end, or this time is different. Because there's a lot of false flags when markets are getting ready to taper and go through a serious correction. There's lots of false flags, and people take those false flags as meaning, oh, this is going to go on, or they'll find reasons to justify why they believe the market will continue on, whatever the market is, whatever it is. And we're seeing it big time today in the financial markets, alternatives, really all spaces, and it's a very speculative time to be in those markets. My caution to you, and I was going to speak really about real estate because that's what I understand. Leave the other stuff on the side. You'll have to talk to somebody else about those. But real estate, particularly equities. What do I mean by equities? That's actual ownership in the asset class or the actual investment. So I can own an equity in a real estate rental property, or like a short-term rental, which has been a big fad over the last several years, which I may speak about a little bit. But if I have ownership, if I own it, the property, or maybe I own it with somebody else, that's fine. I have a fractional interest in it, maybe a tenant in common divided interest, which people often do. I have an equity ownership. I have owner rights, right? I can make decisions on it. I get the benefits of the tax benefits. I get the benefits of any appreciation or inflation hedge that equity ownership may provide. I get the benefit of any increase in cash flows because I or somebody else is managing it well, maybe adding value. Maybe we bought it at a good price because it was mismanaged or needed some renovation, and we put money in to do that. And so we've increased not only the rental income, the cash flows, but also the value. So when we do decide to exit, it's going to have a higher value. That's all part and parcel of investing in real estate or tangible assets. And especially during upmarket cycles, which we've been through a big one this last 14, really going on 15 years now, since the 2008 great financial crisis, everything's been up. Everything's been up. Now, we're seeing some signs, if you've been aware, that there's some weakness in the market. I'm going to say there's a lot of weakness in the market. A lot of it's being covered up. But, we've seen the bank failures earlier this year, more massive than the bank failures of 2008. But people think, well, those were isolated. That's been fixed. That problem was very localized, and it's over. Those are just a few banks. No, not the case. We've seen the fastest rate hike in interest rates by the Federal Reserve in our history, from 0% a year ago, March 2022, to now August going to September at 5.25 to 5.50. That's a massive increase. And what people don't realize is that massive increase, that higher cost of capital, has long-term effects, not just short-term, long-term, but there's a lag effect. They don't cause the market to go through any massive downturn right away. That's why there's these little bounces. You'll see, particularly in the financial markets where there's more liquidity, the market will pop and then it'll drop and then it'll go along and then it'll pop again, and people get these false flags that it's okay. Not so much in real estate, because real estate's a longer-term investment. It's not as liquid, so we don't see the drastic changes, but there's still the longer-term trends, and we're seeing particularly in commercial real estate, office primarily, but also seeing it in multifamily and other leveraged syndicated sectors that the headwinds are approaching. My caution to you is, if you're jumping into any kind of real estate, whether it's your own direct control, buying rental properties and fixing them up to fix and flip, or just buying for a long-term hold, or you're getting into the craze of short-term rentals, or you're thinking about jumping into that next syndication that a promoter is offering you in multifamily or self-storage or wherever it might be, understand you're getting in late cycle. Now, I'm not saying that any of these people are bad people that are offering you these opportunities. They're not. Most of them. There are fraudsters anywhere, and those people are being revealed today. Many people are just people who unintentionally have also bought into the construct that this will never end, that this time is different. And if you're an investor in their projects, I think you're going to find that a lot of these are going to go through a downturn, a rollover, a correction in the next several quarters. I still have good friends of mine, people that I know are good people in their hearts and are not purposely trying to deceive anybody, but they have to justify, I think, models that have gotten them to where they are, as successful as they may have been, to keep that model going, because that's the only model they know. I've had several good friends that have put out recently syndications. I'm the last one that's going to criticize them publicly. I will not mention people by name, because again, these are people who are not intentionally trying to deceive people. But they bought into a mindset, and they surround themselves with other people who have the same mindset that helps them justify that what they're doing is okay, in trying to sell you, me, us, accredited investors into the next cycle, which is really, it's going to be a down cycle. So my advice to you is hold back. Be careful. Be prudent. Get help. If you don't know how to underwrite and look at what you're being offered, I'm talking about the structural, the legal aspects. I've seen some horrific operating agreements, which is part of the package you invest in and you sign off on when you invest in a syndication. I've seen some that are horrific, that I wouldn't touch with a 10-foot pole because of the way they're written, all to protect the syndicator, the operator, the sponsor, and giving really no control, no ability to mitigate damages, if there are any, against the operator. The operators basically set themselves up, the sponsors I'm talking about, to make it a risk-free opportunity for them. And that's why they keep doing it, because they're hoping, fingers crossed, that they can get another one through the gate, another one through the gate. But if they don't, they can roll up, toss it out, and say, too bad, you signed off as an accredited investor. You should have known better. Didn't you ask your CPA? We're out. You're stuck with the losses, and see you later. That's happening right now. You can read it in the Wall Street Journal. It's happening right now. It's going to happen on a greater scale. So again, I don't sell real estate. I got no skin in that game whatsoever. I'm just telling you what I know because I get to see behind the scenes, behind the curtains. I'm in a lot of groups. I have people who do vetting and due diligence for us, and we get to look at in Freedom Founders a plethora of people who would like to enter our arena and offer their offerings to our group, and we take them through filters, and many of them don't make the first hurdle. Well, background checks. Have you done a background check on the principals of the syndicators or sponsors that Nope, you didn't. You haven't. You're just taking the fact that they're good people, nice people. They treat you well. They took you to dinner, whatever they've done, and they have a track record. They've been doing it for the last 3 or 4 years, and they've hit some doubles or at least triples. And you're thinking, well, then they should keep being able to do it because they're nice people. They're good people, right? No one speaks ill of them because, well, they haven't been doing it long enough to have a bad track record. So how long have they been doing it, right? What's the premise, basis on which they are acquiring the particular investment opportunity? What's their funding? What's their leverage? What are the terms of that leverage? And how long have they actually been operating, not just flipping properties, but operating them? Do they even have that capacity? See, most don't. Most have been flipping properties the last half a dozen years. And it's been a great model for this environment. You don't have to be a great operator to flip properties. You just have to get capital, go and buy them, hold them for 18, 24 months, and the greater fool theory is someone else will buy it. And that's been happening, but not today with the cost of capital, as I said earlier, that has gone up massively in the last 18 months. That's changing everything. And you're going to see the commercial real estate market, the credit contraction, the decrease in liquidity is going to cause all kinds of problems. I just don't want to see you as a novice, but trying to become a more sophisticated investor, jumping in late cycle. There's better ways for you to invest in real estate today, in my opinion, than just jumping into every equity that's offered today. The market will change. It will shift. There will be a time to go back to equities. I just don't believe the time is now. Now, I don't have time to go in and tell you the other areas you can go into, but when you just look at equities, owning that rental property, that short-term rental, or investing in a syndication of multifamily or self-storage, that's what I call the first layer of the onion. That's where everybody looks at. That's what everybody knows about real estate. Did you know that there's several more layers of the onion that no one's ever shown you, where you can be more protected, hedge your position, still make very good returns, but without the downside risk? See, that's what you don't know. You can't know it. You haven't been doing this. You haven't seen the cycles. This is probably new to most of you, and you're excited about the opportunity, but what I want you to be cautious about is the fact that the market is turning. And I don't want you to get caught with the losses that can set you back for years, maybe even make you feel like you never want to try it again, because that would be a shame. The only way to really build real wealth and have freedom is through assets, tangible assets. I don't like financial products. I don't like the stock market. I don't like 401ks. I want to have some level of control, but to have that control requires a responsibility on your part to get some education, to have a team around you that can help you see and build a game plan that works for you. Not just jumping in every fad that comes along and say, well, that's a good one, well, that's a good one. No, you need a game plan that's orchestrated to build the freedom you want when you want it. That's what we do in Freedom Founders. A correlated, concentrated plan for each individual based on where they come from, where they're at, and what their specific goals are. See, who's ever asked you that question? What are your goals and how do you build it from there? You got to reverse engineer. But nobody talks about that. It's just jump into this, jump into that. It's all good until it isn't. That's my rant for today. Please take it in good stead. Again, I'm not here to demean people that are doing the best they can with offering different types of investment platforms. I'm just saying there's a lot of naivety, a lot of ignorance out there today, and I don't want you to get caught up in it. It's your freedom. I want you to stay focused on it. Do the right thing. Get the education first before you jump in. See you next time.